damn it.
What's the price target? You show me yours, I'll show you mine.
Hi everyone, welcome. So I'm here, Ziet, and here we have Darren. He is from Singapore. We are both Tesla and Apple Bull. And Darren, welcome to my little studio here. Hope you are having a great time. So today we are gonna answer your questions. So previously I asked you guys on my Instagram stories, and you guys are kind enough to send me some questions on the Instagram story. So today we are gonna dive a little bit deep into those questions. So welcome, Darren.
Thank you for having me.
So Darren, I'm sure you are here for a short trip. So how's your time in Malaysia so far?
Loving it. First time back in KL after more than 3 years. I grew up in KL. So I'm originally from KL, graduated from Help University College, moved to Singapore for work about 15 years ago. Now I'm living in Singapore for the long term, but I hope to visit KL a lot more, especially this year now that the borders are opening again.
Right.
I have to do like daily swab tests, but hey, if there's a price for travel, fine.
I think the VTL is closed, right?
So that's something that a lot of people believe. So a lot of the travel companies actually have to just re-emphasize that there's this limiting number of flights. So you can still book, but you need to book at later times.
I see.
So they don't want to have a large number of travelers, they just want a limited number of travelers so that's easier to contain and monitor.
I see. Darren, you run a YouTube channel talking about Tesla. It's going pretty hot right now. Maybe a little intro for yourself?
Okay, so I started a YouTube channel about now 7 months already, and the main purpose is a business and investing channel, but because I invest 85% in Tesla, so I talk a lot about Tesla and EVs. And what I cover a lot in my channel is not so much the finances, but more the products and services itself. So you'll find a lot more discussions, interviews with Tesla owners, former Tesla employees, visiting their factory, their service center, trying out their cars themselves. Because I believe if people love a product, if the employees love working for the company, if students want to work for the company, that story behind the numbers can be very powerful. Because there's so many people out there already reading into the numbers. I want to add something a little bit more different.
Awesome. Like, I've seen some of your videos, if not all of your videos. Like, you even visited Giga Berlin, you test drove a Tesla in Malaysia, in Singapore, and you met those owners, Tesla owners in Singapore. And as a Malaysian here, we don't get the chance to ride in a Tesla. So having videos of our neighboring countries, people doing videos about Tesla, is just pretty mesmerizing. Like I myself, I've only seen Tesla Model 3 in Malaysia like twice in my lifetime. So I'm pretty excited to even get a chance to ride in a Tesla. So let's get on with it, Darren. So I've asked a few questions on Instagram stories, and let's dive into the first question. So, heard that Apple has lost its touch. What are the company's long-term vision and scalability, in your opinion?
So my question back is, what makes you believe that statement that Apple has lost its touch? So anytime you read a statement for or against a company, just go back to first principles. What do they mean by losing their touch? Is it less profitable? No, it's one of the most profitable companies in the world. Are they generating less cash? No, they generate 100 billion in cash per year. They don't know how to spend the money. Are they losing market share? No, look at smartphones, look at their laptops, their M1 chips are doing very well. So is it because the leader is not Steve Jobs anymore? They are launching new categories. For the past 10 years since Steve Jobs left, they've launched the Apple Watch, they've launched the AirPods, they've launched their own line of chip processors. This end of this year, there are large expectations by many Apple analysts that they're going to announce their mixed reality device, combination of augmented reality and virtual reality. Some people believe that the Apple car is coming a few years down the road. So I think consider the question by understanding where that's coming from. And also, are there any certain agendas and motives behind certain questions? Does someone stand to gain financially by you believing something? Yeah, so always have a critical mind as an investor for or against a company that you're investing, or some of you may even be shorting a company as well. To me, Apple would probably be, I would agree the perception that we come across as maybe less innovative or less crazy during the Steve Jobs days, and they always had one more thing, like the MacBook Air coming out of the envelope. Wow. That was
exactly
mind-blowing. I remember watching it live, I think, many years ago. The showmanship of Steve Jobs, not there. But then quality of leadership is strong. The company is financially and product-wise very solid still. That's my take.
I think I can understand why so many people, not just Malaysians or Singaporeans, right? A lot of people have been saying the same thing, like iPhone 11, iPhone 12, iPhone 13. It's the same phone, just with better camera, better chip. To me, that is actually not the right way to look at a company. Like, correct, iPhone is probably the largest segment of their revenue. But if you just base off that, then I think you're missing out on a lot of value behind the company that the ecosystem provides. Like the M1 MacBooks, they are easily state-of-the-art machines that can outperform Windows machine or an Intel machine by a few multiples. iPhones, you are saying that it's the same overpriced phone with a bigger, better or more camera, but there's so much more to it. The salvage value of the phone is better, the lifespan of the phone is better, everything is so much better with the entire ecosystem paired together, the iPad, the AirPods, MacBooks, with the Apple Watch, with the iPhones. So I think everything comes together. So rather than just looking at it as iPhone, Apple, they are not innovating, like as you've rightfully mentioned. So I think that is not the most right way to view at a company like Apple.
To this also, as an investor, you got to separate what people say, sentiment, and what people do. So you may say, oh, phones are the same every year there's slightly better camera. Those are sentiments and those are what people say. Then look at what people do, which is how they spend their money. Ask yourself, are people spending more on Apple every year or less every year? You will find that in most categories, in most countries, the answer is
more.
Yet myself, we're spending more on Apple every year and not less.
And countries' GDP are getting higher. People are getting quote-unquote richer. People got more cash to spend. People eventually want to upgrade their life, so they tend to shift towards a middle, if not more luxurious segment of stuff. Not just phones, cars, gadgets and devices, right? So let's get on with the next question. Ram Satish asked this question. What's with the valuation of Apple? Is it sensible that it is so high? Like at last check, Apple is about 170-ish US dollars per share, and its PE ratio is about 30. Like Darren, what's your take on this?
So context here, as you all know, Apple is the world's first $3 trillion company. 5 years ago, even a $2 trillion company would have been insane. And right now, so they took 3.5 years ago from 1 trillion to 3 trillion. It's a pretty insane time frame. So when you think of companies' valuation, we got to think of it forward-looking and not backward-looking. We drive by looking forwards and not in a rear-view mirror. So this valuation as it is right now, we can come back to first principles. A $3 trillion company. Is there any other company in the world that you know right now that has 100 billion in cash flow per year? Do you know any other company that has 50 billion in cash flow per year? Do you know any company with 25 billion in cash flow per year? So that's one thing to consider. Second, do you know any other company where in most of the categories they operate, phones, laptops, they take 70% of the industry profits. For smartphones, it may be 15% of volume, but they're 70% of industry profits. A few years ago, they used to be 110, 120% industry profits because others were losing money selling phones.
Oh, wow.
Yeah.
That's crazy.
It sounds a lot, but ask ourselves, I think one way, big part of investing is mindsets and to train our thinking. Why is a company valued 3 trillion and not so much, is it crazy that it's worth 3 trillion? So why is it worth 3 trillion? Break down the building blocks. So whether you look at PE ratio, there are far more companies out there with far higher PE ratios. This company here in my t-shirt, people think that the PE ratio is insane. We'll talk about that later.
Speaking about that, the next question is related to Tesla. So Darren, I'm sure you are more well-versed with this question. Any car manufacturers, Ford, Volkswagen, BMW, etc., that can dethrone Tesla?
Very fair question, and we ask this in every industry that we do analysis on. For Apple, it could be Samsung, Huawei, or whatnot, or Xiaomi. When it comes to EVs, it's unique because of Tesla's situation. If you look at just raw production numbers, vehicle produced, no one produces matching Tesla's EV production volume. Tesla has made 938,000 EVs in 2021. The next highest manufacturer is probably 500-600k total EVs. To me, Tesla's challenge isn't so much the industry itself or other EV companies. And I think that the industry isn't fighting for number one in EVs. Most of them are going for number 2 right now, because Tesla isn't just the most in EV production, they're actually ramping up the fastest in EV production as well. Their factory capacity is far higher than any other manufacturer. The best and most credible challenge to Tesla from an industry perspective is the Chinese EV companies. Why? They have the commitment, they have the drive, they're moving very fast. They are in a country where the government's super supportive, the local population is super supportive. There was a survey recently where we asked the citizens in the US and China, how willing are you to try like EVs or self-driving cars? In the US, like self-driving cars, about 20% of people say, yeah, I'm willing to give it a shot. In China, that number was about 70%. So the user mindset in China is very different, and China is the world's biggest auto market. The government's going to support local companies, help them grow as well. So whether it's a NIO, an XPeng or whatnot, or BYD, those would be, to me, the closest challenge to Tesla. which relates to, I think, the biggest challenge to Tesla is regulations. Just like how the past year has seen a lot of Chinese industries go through very tough situations in the name of common prosperity. So the common part is done right now, the prosperity part will come eventually. But if, let's say, the Chinese government says Tesla cannot sell in China anymore, or they control 80% of the world's battery supplies. The whole EV industry is about battery supplies. You do not have batteries, it doesn't matter how great your car looks or how much your factories can produce. You need the raw material.
True.
80% of it is with China right now. And they say we're prioritizing domestic EVs to get it, then that's going to be the biggest threat to Tesla to me.
Right. So it's more not so much about demand competition, it's more about supply, the bottlenecks and etc., which is, I think, Tesla's main challenge right now. And even with the supply chain issue, they still managed to blow out their last quarter in Q4 2021, way above analyst consensus. So that is pretty crazy. So just imagine company moving at that rate and can grow even further, and imagine if there's no supply chain issue. So things would blow out of proportion if the Gigafactory Berlin, Gigafactory Texas, I suppose, started their production. And I think they are all underway already, right? With Giga Berlin and Giga Texas.
Yeah, so Giga Berlin and Texas will be going live very shortly. Many people have already seen cars, Model Ys being produced in those factories, mostly for testing. You expect to see a new news definitely within this month, very, very likely. So another context here on just their growth. BMW or Mercedes, and Ziet will fact check, is one of these companies. They produced 2.1 million cars in 2021. Tesla just made 926,000. So Tesla is going to sell more cars than BMW or Mercedes within 2023, 2 years from now. That's pretty insane.
True.
3 years ago, they were barely even 10% of these brands' volumes. Of course, number one, number two are Toyota and Volkswagen. They make about 10 million cars a year. So, but as we know, as investors, the market doesn't reward volume as much as profits, which is why Apple is worth X times more than a Samsung, Huawei or Xiaomi.
True. It's all about the future growth, because a lot of things have been priced in, and people, especially investors, they are all forward-looking 12, 24 months ahead. People want to see growth rather than what you are achieving right now, right? So I think that's the essence of it. Now, moving on to the next questions. Howard Tan asked this question: what are the reasons causing the US stock market drop recently? Like, we've seen growth stocks being crushed. We've seen Tesla, even after the blowout quarter, it still dropped back to the same level that it was before the announcement of the blowout quarter. Even big companies like Apple and etc., they are all dropping significantly. Well, maybe not so much for the big companies. So why is that the case?
So I'm a new investor as well. I only started investing in August 2020. So I'll share my own simple perspective to things. This is driven by macroeconomic changes, and these are, I'll say, a reaction to intentional changes by the US Federal Reserve. For those of us who are not as familiar to it like me, the Federal Reserve, the central bank or the governing body in US, their main goal is to manage prices, to keep prices stable. Because if inflation is too high, people get worried about money, and then money loses value. It causes a lot of chaos in the economy. And if there's deflation where prices go down, it's not good for the economy as well. So for the Federal Reserve, their single KPI, their goal, is to keep prices stable, which means 2% inflation per year. Last year, in the US, the inflation rate was 6.8%. That's the highest inflation since 1982. So for the Federal Reserve, their goal is, I need to reduce inflation. How do I reduce inflation? By, again, reducing the bond buyback to increase interest rates. When you increase interest rates, inflation generally goes down because the cost of borrowing, the cost of spending, investing goes up. So the challenge is, a lot of people feel that the Fed is taking more proactive or multiple actions to try to rein down inflation. And last week's reaction in the stock market, where a lot of things dropped, even Tesla dropped about 11% last week, is because of the Fed notes in December. So those were notes in the meeting a few weeks ago. Now, what the Fed has said is that we will project our actions very clearly up front so that people have time to react to it. We don't want to crash the market or cause undue turmoil as well. Because they tried doing, you'll hear this term in the news a lot recently, like the quantitative tightening, right? Which is opposite of quantitative easing, which is putting in money supply. So they did quantitative tightening in 2017, 2019, but because the asset prices dropped so much, they had to put a hold to it. So this time, they are listening, and when they had those meeting notes back then, Omicron cases and the situation that impact the economy wasn't as high. So with that, some investors believe that they're not going to tighten the money supply as much, so the interest rates won't go up as much. The other thing is, last Friday, the US released a monthly jobs report, so non-farm jobs report, where the expectation was to have 455,000 new jobs being increased in the US, created in the US. But the reality in the report was only 200,000 new jobs created. So the Fed's going to look at all this data and say, okay, I don't think the economy is doing that well. If we increase interest rates right now, it's going to be a really tough time for many people. So to me, this is almost in a sense an overreaction to what the Fed is doing, but the Fed's reason for doing it is because last year's inflation 6.8%. The economy seems to be doing quite well, which is why they wanted to tighten things. But long term, I'm bullish, and actually in these kind of situations, even more so, you want to invest in companies with low debt, strong financials, good growth prospects.
True, and I think you pretty much encapsulated the entire situation that's revolving around here. So just to give a little idea to the audience, so when interest rate rises, the cost of borrowing increases, like you rightfully mentioned. So money is not as cheap as before. So when the cost of debt increases, the discount rate for future cash flows reduces. So which is why growth companies, especially younger companies, which are usually higher in valuation, the investors give them a lot of premium, a lot of promises of future strong cash flow, strong disruption, etc. Those get discounted even further, which is why the valuation of those growth companies, they are now starting to dive down because people have been overvaluing those growth companies. So as you can see, even though Tesla is dropping 10-ish%, Apple is about 5 to 10%-ish, you can see that growth companies, especially younger ones, they are being decimated 30-40%. So that shows you that people are moving from risk-on assets towards risk-off assets. So which is why we see the shift amidst all of this chaos lah. I also believe that it's an overreaction. I myself is also long-term bullish, especially let's not say long-term, even in the medium 3 to 5 years term, even with the midterm election coming end of this year, I'm still bullish, although it's gonna be a little bit choppy, maybe trading sideways in this market in 2022. I do believe in the medium term it's still a pretty good prospect for the US market.
Agree. I bought more Tesla stock last week as well.
So do you want to reveal your buy price
Yeah,
to the
so
audience?
I bought 50 Tesla stock last week for $1,000.50. And actually, there's another question coming up related to that as well.
Okay, maybe we'll touch on that later. So let's move on. Alright, so next question we have is actually a pretty common question that we have. So I'm gonna just bundle all them together. So Apple prediction price target for the end of year 2022. What do you think? So it's about 170-ish US dollar per share today. So for 2022, what's your rough estimation, not financial advice? You shouldn't buy or sell anything according to what we say here. This is just our personal view. So what's your price target for Apple in 2022?
$210. The rationale is the past 10 years, the average annual return has been 22% growth. So you take about 170 multiplied by 22%, you get about 210. What's very interesting is despite Apple being $3 trillion company and most valuable company, valuation has dropped below $3 trillion now, is most of the analysts that actually follow and write on Apple, they have a buy rating on Apple stock.
Even with Tesla, the investment bankers or research funds, they are pretty bearish with Tesla, but recent times they have been moving towards being bullish on Tesla. So I think it only takes time for people to realize how disruptive a company can be, case in point Tesla. And I think Apple as well is still a pretty strong company that is growing year over year. We see their subscription for their software increases, maybe a little bit drop in the iPhone 13 sales, but it gets picked up in the MacBook section, and then also the wearables, the Apple Watch, and etc. So overall, I think for a company like Apple, there's still growth ahead in time. And we haven't even talked about the potential wildcards like the metaverse, like the Apple car, which I think we will talk about it slightly later. Okay, so next question we have here: your view on 2022 and actions you will take to be prepared for the new year. I think it's roughly related to the last question, but what's your take?
On 2022, some people expect that to be a bear market, something is a bull market. So for us, nobody can accurately predict and consistently predict short-term outcomes. What we can do is prepare ourselves. So I always try to think, how do I prepare myself for a bull market, which is really just dollar cost averaging? How do I prepare myself for a bear market, which is also dollar cost averaging? Now the big difference is, especially you need holding power in a bear market. In 2008, Apple's stock price dropped by 50%. It lost 50% of its value. A lot of people said, stop loss, let me cut my losses before it's worse. They sold Apple stock at 50% loss. The year after, it recovered fully. So in bear markets, more so, especially for those of us who are new investors, because many of us, like me, I started investing in the middle of COVID. So the past 2 years have been a strong bull market. Many of us have not experienced the bear market yet. True. A big part of it is holding power and buying the dips. So building capital to buy potential dips if it happens is, I save my salary, I save my bonuses, I'm working full-time, working hard for it. And if you work in a sales-related role, you do have more cash flow. The good thing about working in sales is that the more you put in, the more you get. Whereas when I started my career in finance, no matter how good my job is, at the end of the year, I get a nice pat in the back, okay, here's 5 or 10% more, well done. Whereas for sales, like your quarterly bonus can vary. So most of my career has been in sales. I do my best to save up as much. And actually, I don't keep, so that's, a lot of people think, you always hear this, let's keep 6 months of cash for emergency, yes. So the principle is sound, but my 6 months of cash is basically me buying Apple. Apple is kind of like my cash equivalent because its value is relatively stable. Again, this is not for everyone because Apple stock can go down as well. But to me, it's super stable compared to Tesla. Anyone who's a Tesla investor, Apple is super stable. And anyone who buys crypto, Tesla is like an ETF.
True. I mean, you touched on a very good point. Actually, I have the similar mindset as you. There's been a lot of these financial advice going around, even with licensed financial advisors. They always say, get yourself prepared with 6 months emergency fund savings. As you see, pandemic, it has hit everyone. Like, I totally get it because not everyone is probably as fortunate as us. Not everyone has the same situations as us. But if you are indeed fortunate and you have food, you have a roof over your head, you have relatives with you, you have friends and families with you, and you have nothing much to lose, then probably get the most basic insurance to cover yourself from the accidents that we cannot expect, and then get yourself a credit line that you can utilize if, touch wood, accidents do happen. So once you got that covered, that leaves very little space for really, really unfortunate events to happen. And even if that really happens, you have your stocks to back you up, you have your credit line to back you up. So just take more effort, or should I say, just put more thoughts into this. Does 6 months savings even help you when it comes to really managing your finance? Or should you just be lenient or be lean a bit with your cash savings? Then maybe look at more stable stocks. Then you balance and reevaluate the way you invest your money and your stocks as well. So I think that's a very good point that you've talked about. It's also something that I would be keen to explore in my future videos, right? So okay, next question from Julian. Being Tesla bulls, are you concerned about being in an echo chamber that may cloud your judgment? And how would you minimize such risk of judgment cloud?
One of the good and bad things about being a Tesla investor is that it's probably the world's most covered company. There are more Tesla YouTube channels out there, Twitter sites, Instagram sites, than there are people covering Palantir, Apple, Berkshire Hathaway or whatnot. So yes, you do get a lot of Tesla to the moon kind of messages, but there are also a lot of Tesla critics out there. There are a lot of people. To one extreme, you got Gordon Johnson, who I think it's a great person to just lighten the day. But there are also a lot of genuine criticisms, critiques, or you see whether it's the mainstream media or even, let's say, those car magazines will say, oh, Tesla is not a safe car, or Tesla does full self-driving hits people. So there's a lot of information out there just to validate. Every time when we see criticism of Tesla, what I try to do is I ask myself, how could this be true? In what situations is this true? I always believe in everything there are shades of the truth in the lie, and also shades of lies in truth as well. Nothing's fully true, nothing's fully a lie. Always coming back to Elon always recommends to people, their engineers, employees, and I think to investors as well, think in first principles. What is Tesla good at, what is not? Like Tesla customer service, for many people, not the best experience right now. It's far from Apple customer service. Even though, fun fact, they actually hired the Apple store leader to develop the Tesla stores. So they wanted to create like the Apple experience in Tesla, which is why their sales staff do not have a sales commission. You walk into an Apple store, nobody will push you to buy products one. And when you leave an Apple store, the manager will ask the staff, what's one fun thing you learn about Ziet? Not what do you upsell Ziet. There are good and bad in the company. There are a lot more bulls than bears right now. So I think one good exercise is when you meet your other Tesla investors, ask them what could go wrong, and assign probabilities to what could go wrong, and assign probabilities to what could go right. A lot of people say, oh, when full self-driving comes out, it's going to be amazing. Yes, what's the probability of that happening this year, next year, the year after? Probably 5, 10, 15%. So I think when you assign probabilities and just think through it and work through your own thinking, not just listening to others, but listen to yourself as well. That helps us to really openly assess Tesla's strengths and weaknesses.
I think same goes to every other stock out there, right? You just need to weigh the pros and cons and the risk to reward trade-off that you have right now. So right now, we have a lot of transparency and clarity thanks to the mainstream media coverage, thanks to a lot of professional coverage as well towards Tesla. Of course, there's bearish, there's bullish, but from what, at least from my own perspective, I can see that there's more bullish upcoming catalysts compared to bearish arguments. So you need to weigh the pros and cons of how both sides are arguing and make your own judgment rather than just listening to people. Even people like me, you shouldn't be affected by how I invest my money into Tesla, and you shouldn't even follow blindly. You should do your own due diligence and decide for yourself whether is it a good investment for you, right?
And I want to add to this, when it comes to deciding for yourself also, you all see the hedge funds with all this smart MBAs have consistently underperformed the S&P 500. That means you literally just buy ETF of S&P 500, which gained 27% last year, and average track records about 10% growth per year. You're doing better than all these MBAs and Harvard Business School people at times. The other thing is, we talked about earlier, don't just see what people say but what they do. A lot of financial analysis is what people say, what people think it will happen. But I meet Tesla owners almost every day. I meet students. When I give talks in engineering schools in Singapore or other countries, I ask them, where do you want to work? Tesla. How about Ford or GM? No, we want to work for Tesla. In the US, they also want to work for SpaceX because you need to be a US citizen to work there. So I get a lot more conviction from the people on the ground, the students, the drivers, the users, the employees, than the financial analysis that comes out, because it's what people are doing. When you see uni students, even in Malaysia, talking to some friends, they'll recognize a Tesla on the street. They go, that's a Tesla. Like, people get super excited about it. So you think about the next generation of investors, employees, drivers. So that is one way I try to validate. The moment like young people stop getting excited about Tesla, when people don't want to work there, I will be a lot more worried than what financial analysts say about the company.
Same goes to Apple. If you just look around your friends, your ring of families and relatives, ask them if they are using Apple iPhone, how's their experience with iPhone. I'm pretty sure most of them are pretty positive, and I think that's the most surface sign that you can see that people are satisfied with the product. So I think you can go ahead and use that as the basis of your conviction and just build on your research and due diligence, right? So Darren, the next question we have from LKY. What's the most crucial pinpoint of investing in Apple?
By the way, for Singaporeans, LKY, the former Prime Minister, and also the badminton player who is originally from Penang, who won the World Badminton Championship. Yeah, so LKY, LKY to the moon. Okay, to that question, my interpretation is, what's the most important thing when you think about investing in Apple is, because it's really such a large company, the good and bad thing about large companies is that change tends to be more gradual. So if fundamentals change for the better or worse, you normally can see it from a mile away. So I just try to look at the base fundamentals, like, is subscription revenue going up? Is software services revenue going up? How is their AirPods, their Apple Watch adoption going up? The moment one day you see Ziet not wearing this and he's wearing another brand, you know you can sell Apple already. Yeah, so I look at those like baseline user adoption fundamentals, because the other things like new product launches, you can read, like I subscribe to the Apple newsletter by Mark Gurman from Bloomberg. He's really good at covering Apple.
Yes.
I think many Apple investors read that. So you'll get a sense, and normally it takes a couple of quarters to really see a downtrend or an uptrend. There'll be some quarters like when Apple doesn't do so well. Why? Because Apple's a very seasonal business. The quarters where they launch iPhones, when they have supplies for iPhones, boom, everything goes up the roof. Then it comes down again, right? So Apple is very seasonal. So I look to the seasonality. Very important look at seasonality. It's not going to be consistently up a straight curve like that. And I look at the fundamentals. Are they getting more users? Are people spending more? One very interesting thing is, despite all the complaints, people say, oh, the phone is just a phone, right? What's the big deal? Nothing sexy about a smartphone. It's a commodity. It is true in most of the cases, in most categories. When an industry is commoditized, the prices drop. But if you look at the data at iPhone average selling prices in the past 10 years, it's went up. As investors, we are looking for the things that people do not see, not the things that people commonly say. We buy fundamentals, right? If you want to buy fundamentals, it's not just looking at news media and saying or talking to your friends, but also that's where I think data comes in. So while I like to look at the story behind the numbers play a part in contributing to that as well.
Okay, I think that's a pretty good answer. So next question we have from Ari. What do you think the upside will be for Apple in 2022 and beyond? More bullish for Tesla or Apple?
Wow, short answer is Tesla. Why? When Tesla launched their Giga factory Shanghai about 2.5 years ago, back in 2018, the share price went up significantly because they basically almost doubled production in Giga factory Shanghai. It takes a few quarters to ramp. This time, Tesla is launching 2 new Giga factories in the same quarter. That's pretty insane. And Tesla is a stage where they're already quite crazy profitable. So a lot of people see Tesla's growth from a sales perspective. What a lot of people do not see is the profit growth. So 2 years ago in 2020 was the first year that Tesla made money. Before that, they were losing money all the time. And people always say, oh, they have got all the EV credits or whatnot, emissions credits to make money. So anyway, 2 years ago in 2019, Tesla made 700 million in net profits for the year. In 2021, they will have their Q4 earnings end of this month, but they're going to make at least 5.2 billion US dollars in net profits. Here's how I get 5.2. It's because last quarter in Q3, they made 1.6 billion in net profits. So their deliveries went up from about 240 plus K to 308K. So you just do very oversimplified maths, like 28% growth, you get about 2 billion in net profits for Q4. Minimum 2 billion. Why? Because fixed costs doesn't scale with new production, right? So fixed costs, they have a very big fixed costs because of their gigafactories. So last year will be about 5.2 billion. This year in 2022, they're going to get a roughly about 15 billion in net profits. For context, the world's most profitable car company in 2020, Toyota, is 18 billion in net profits. I believe by 2025, it will be like an iPhone situation where Tesla has 70% of the car industry's profits. Today, all of Tesla's profits mostly are driven by just the hardware excellence. That means the hardware margin. Full self-driving Tesla insurance is a very small percentage of their contribution.
It's still in beta, right?
And all the Tesla energy, solar, they're actually lower margins. They're not adding to the margins. So when the services side actually starts growing, the margins are going to grow quite a lot. So you're here to hold me accountable. The good or bad thing about YouTube is that whatever people say, you'll see it for years from now. 2025, 70% of the auto industry's profits, Tesla. And the PE ratio of Tesla today, people say, oh, crazy man, 300, 350. But if you project out their earnings growth in the next 2 to 3 years, it's not that crazy.
It will be crazy undervalued by then.
So because of that, I see a lot more upside in Tesla in the short term compared to an Apple. Again, Apple's like a bond to me. If this consistently grow 22% year on year, that to me is just a way of beating inflation. It's my liquidity. Yeah.
True. That's a very nice way to cover it. So, to the moon, Tesla.
Some people say, reach the moon, hope don't want to go to Mars.
True, so I will change to the Mars. Okay, next one by Kevin. Will Apple Car be a thing or fail?
So as a big Apple fan, I'm not bullish on Apple Car, and here's why. When Apple launches a new category of product, they're not the first to launch anything. A smartphone, a laptop, the watch, the AirPods. But they're the first to give an amazing experience. Before Apple Watch, there were a lot of wearable products, but it sucked. The battery was slow or whatnot. Apple Watch came out, took the market.
Even until today, the Apple Watch battery still doesn't last longer than 2 days.
And people still buy it. The biggest complaint, like, nobody's going to buy a watch with a battery life of less than 2 days. It's crazy, right? The profits and market share are saying something different. AirPods, people criticize the look. Everyone's wearing it now. Competitors are using the same look as well. For cars, if you're driving a Tesla or a Rivian or a Lucid or a Neo right now, it's a pretty good experience. The hardware is good. The software is good. And if Apple is launching the car 3-4 years from now, imagine how much these companies are going to improve 3-4 years from now. So I don't see problem in automotive that Apple is solving for. And Apple outsources manufacturing. In the automotive industry, you've really got to in-house manufacturing. So one of Apple's big strengths is they don't make their own phones or any of their devices. Foxconn or other suppliers do it for them. The high margin businesses in auto, they are making them in-house because of the vertical integration. So I don't think this sets Apple up for success. Are they going to launch a car if they really want to? They will, and it'll probably be okay. But is this the best thing that I'll bet on? I assign zero value on Apple Car as a as an Apple investor. I assign a lot more value on Apple's foray into the AR, VR devices as well as healthcare. So Tim Cook has said a few times in interviews that Apple's biggest legacy to him when he leaves is the healthcare impact. And healthcare as an industry is far larger than transportation or mobility. So they already have a strong brand in privacy. They already have wearable devices that senses our heart rate and so many more. Build on that rather than going cars on the ground up. Now, yes, Sony is also launching their own cars. They announced in CES.
True.
I think they're going to sign up for Sony Mobility. And one day you can take your PS5 controller and drive your car, play some Witcher 4 by then. But
that's pretty wild though.
Yeah, and that I am not bullish on Apple Car. I did do a lot of research with friends, talk to them, but they're not solving a pain point to me in mobility right now.
True, and it doesn't feel like it's Apple's nature to want to suddenly compete with a hot segment right now. Like you already rightfully mentioned, so when Apple introduces something new, or maybe introduces something new in their lineup, it's always top of the line, state of the art. It's always the best experience ever. And for me to think that Apple will come up with an Apple Car in a sudden that can compare or fight with the Tesla equivalent, that seems a little bit impossible and improbable in my opinion. So to think that Apple will come out something that will be greater than Tesla in terms of EV sounds totally out of the probable reach of our due diligence, but to think that they might come up with something maybe along the line of software and Apple ecosystem that could play well with your devices, maybe that's a more probable approach with the Apple Car, not so much over on the EV side, in my opinion.
Yeah, CarPlay is very popular. It's one of the most requested features by drivers. They love it because CarPlay UI is leaps and bounds ahead of UI, especially from legacy automakers.
Okay, so we have the last question of the day by David Lee. You think still got chance to top up Tesla under 1,000 or not?
Well, Tesla's current closing price at 1,023 isn't that far from 1,000, so could it happen? It's possible, but it's going to get less and less likely every passing month. The other thing to consider is, we've all heard this term, penny wise, pound foolish. Whether you're buying Tesla at 998 or 1102, 10 years from now, in 2030, you look back at that, it's a non-material price difference to me, especially if you're thinking as a long-term investor.
Exactly, that's the point that I'm always trying to tell people. Why do you want to like buy $50 or $100 or $200 cheaper when it's leaps and bounds ahead in 3-5 years, and the giga factories are still gonna come, and we have probably giga Asia, giga India. I mean, who knows, right? So they are increasing, they are growing rapidly. So to me, I couldn't care less, to be honest. Just dollar cost average, DCA all the way. If you can't really afford so much of a Tesla share, then maybe save up 1 share a month or 1 share every 2 to 3 months. It's still good in my opinion. Like, as long as you're consistently investing, of course within your capability, your financial capability, and with risk management in mind, I think dollar cost averaging is the better approach ahead, right, Darren? So Darren, I think we pretty much covered all the questions that we have from the Instagram stories. So closing thoughts. Actually, I don't have closing thoughts.
Cut the end. That's it.
Okay, that's the best outro ever. Okay, so Darren, I think we pretty much covered all the questions that we have today. So Darren, tell our friends here, where can they find you?
You can find me by searching my name, Darren Yong. There'll be a link in the description. I'm just one of the many different sources, another different perspective in there. Great thing about being an investor is that there's so many different voices to hear from. Many of us would actually credit this as the rise of retail investors. 10 years ago, we would have a lot less information than institutional investors. Today, we've got people like Ziet, who is transforming many lives.
And Darren as well. So Darren, thank you so much for your time today. It's been a pleasure talking to you. So Darren, one last question. To the Mars?
Let's go to Mars.
Let's go to Mars. You heard it from Darren. So guys, thank you so much for watching. We'll see you in the next one. Bye.